Welcome to the solar flare edition of Mark Putrino's Institutional Trading Research. Good morning, everybody. Listen, I want to give a special shout out to Andy with Mighty Soldiers from a 65 EMA t-shirt today. Thank you very much, Andy. Good morning, Mark.
Hey, how's it going?
Excellent.
Good. So,
Man, they beat up Steve Buscemi, huh?
Yeah, he's awesome, man. I like him.
Yeah, I love him, man. That Boardwalk Empire was one of my favorite shows I've ever watched.
He was good when he was in The Sopranos, too.
Yeah. And Armageddon.
Yeah, so, all right, let's just see what's going on today in the headlines over here. All right, let's see if there's anything that's worth looking at, or is it all just bogus garbage? Why is inflation so stubborn? Well, that's because the government keeps spending money we don't have. That's why.
That's exactly right.
Let's see what
it's
they
like
say
that
here.
3.2 billion they gave Microsoft last month. Microsoft doesn't need $2.3 billion to create 2,000 jobs.
Dude, I think we're gonna go into like a pretty serious period of inflation here.
Yeah.
Like it could get really bad. And the bottom line is, the Biden's a freaking idiot, and so are Janet Yellen and Jerome Powell, because they just keep spending and spending and spending. Check this out, right? This came out. This is the services report, the ISM report.
Mm-hmm.
I saw you subscribed, so thank you.
Thank you very much.
You will come to benefit the fact that you are a first person to sign up.
And that first video we sent out was a little bit of a faux pas, so we included it as an addition into the second video that we sent out. So there was a couple of good trades in there, I hope.
But we appreciate it. But anyway, look at these prices for one month. Okay, up 5.8%. This is the service industry. This is about 80% of the industry. Manufacturing is like 20%. And let's see what their prices were. Wow, look at that. So manufacturing price, I didn't realize this, we're up 5.1%. So we're talking about 1 month here. So how does that equate to 3.8% annually? You know what I mean? So this is pretty frightening. And then if you look down here at the commodities that are up in price versus down in price, there's only one that's down and the rest of them are up. So now also, if I look at some of these commodities, these things are just starting to rip. And this is what I said was going to happen.
Is anybody else having trouble hearing us? Steve, Di, Heather? Here, go ahead, Mark. Keep talking. They'll answer.
All right.
Okay, good deal. Okay, good
all right.
deal.
Anyway, all right. So let's just look at some of these commodities here. I mean, look at this. This is wheat. This stuff has not trickled through yet to the to the actual market, the consumer market. So as high as food prices are now, how could they not go higher when you got stuff like this going on? Look at this, like ripping higher here. Let's see what the percentage is. So up over 20% in a matter of a month. Rice.
Wow. That's not even felt at the store yet.
Exactly. That's what I'm saying. I mean, look at this move up in rice.
Oh.
Consolidated, but now it's ripping higher. Looks like it's going to be.
Most of the world eats rice more than anything else.
Soybeans. They could, look at that. Got right up to that. What was support? Here we have our support turning resistance, and here's our descending triangle pattern. So we see these same patterns on charts of different things because we're just looking at the chart of the people that are trading them. And this shows when you get the bottoms form at the same price, but the peaks are forming at lower prices as time goes by. It just shows that the sellers are getting more aggressive here. And a lot of times when you get these lower highs leading up to a support level, it's an indication it's going to break. And that was the case here. So we got up to here, what was support converted into resistance. But still, though, if we break through this resistance, this thing could be set to kind of move higher.
Good morning, Avi. Morning, Adam, Lonnie. Thank you guys for joining us this morning.
Corn here is starting to move. I mean, let's look at this. So since the end of February, corn prices are up like 17%.
So what does it take? Usually a month or so past the time that it rises before they actually start getting to us?
I don't really know. I think it's probably a couple months. Look at copper prices here.
Yeah. You've been sounding the alarm on copper for a while.
So this is ridiculous, man. I think that this is going to really, in my opinion, really heat up come like end of the summer. It's just if you consider how much food costs now, and then you consider that these big moves higher in these major agricultural commodities, these recent big moves up over the past couple of months haven't really caught up to the stores yet. It's going to get pretty ugly, man. And a lot of people are really starting to hurt out there.
Yeah, it's just a matter of time before it really comes apart.
And then the government just spends and spends and spends, and that's what makes us have inflation. And they just don't seem to they don't seem to get it or they don't seem to care. I think it's that they don't get it. I think they're so out of touch. They're so out of touch with like what it's like to be the common man.
Yeah, to pay for something, to actually walk into a place and pay for something out of your own pocket with your own money.
Yeah, like these Lisbon liberals, right? It's like, okay, well, I inherited $30 million, so whatever. I don't care if the price of milk doubles. Not going to bother me,
Mark, that's one of the things that soured politics for me was when I would go to these conferences and I would park in the outside lot and walk up because I'm saving my taxpayer money. I mean, I would go in and I would get a pizza and I would eat that pizza for the 2-day conference. $7 it cost the citizens for me to be their representative. But I'd look downstairs and you'd see every single one of them valet parking, popping out their credit card, running it through. All these people that are unelected that are just throwing the money out the window. They just live lavish lifestyles off of our dime, and it's sick.
Well, I hate to say it, but I guess I'm not surprised that all this stuff is going on.
No,
I could have told you this 4 years ago. That this was going to happen. It's even worse than I thought it would be, though. All right, so oil back down. Just take a look at this while we're at the commodities here, hanging around the 78.80 level. So this is something too that I'm not necessarily saying that this is going to go up, but it is forming a base, which means it's not going down anymore, which means it could be the first stage of this starting to go up. Here's that descending triangle pattern again here, like we just saw in the other one there. It's the same pattern. Anyway, so that's holding in there. And then natural gas kind of holding in there as well, I guess. All right, so let's go see what the stock market is up to this morning.
Yeah, you use a lot of brass and copper in your industry, don't you, Steve?
Yeah, it's man, it's about to get hit. All right, so let's look at this here. So probably going to run into a little bit of resistance here because the S&P is getting pretty close to this former resistance level. And we know that there's resistance. There tends to be resistance at former resistance levels. There's people who bought here when the price was at this prior peak, but then the price goes lower. And a lot of the people who bought are like, this sucks. If I can get out at break even, I'm going to. So when we get up to this level that was a peak before, there's a chance there's going to be some resistance there again. So this could kind of stall us out a little bit. Big part of this, I think, is what's going to happen over here with Microsoft, because this is the biggest stock in the market, and we know that levels that were support tend to turn into resistance. So this could kind of hit resistance here as well, right? So this could stall out a little bit here. I
Mark
think that
Postman's got a good
the kind
question
of the
here for you.
important thing to watch, really, to get insight into like what's going to happen in the broader markets is probably like right here in the financial sector. Different sectors are kind of in control of the market at different times, and I think now it's the financial sector. Now, remember we just talked about finding resistance at a former peak. Well, that's why there was resistance there, because it was the peak back here in January of 22. So there's a good chance there's going to be resistance here again. So I think like kind of the magic level here is like right where we topped out. So let's say like around 42.20, which is only 30 cents away. That, I mean, that would be about 70 or 80 basis points higher. But yeah, so right here is going to be critical to watch. And then within the financials, I think what's really important to watch are these bank stocks, whether this is going to break out or not. I mean, it looks like it's starting to. See, we've cleared all these little past highs here. So yeah, I mean, it looks like we're starting to, but it's it's a little too soon to tell to really have a lot of confidence so far.
Mark, could you address this question from the Postman, please?
Um, yeah, I think a stop loss is really, if you're a trader, it's like a critical thing to have, because if you have some money, right, you want to lock it in. Now, a good thing about having a stop water is, or having a trailing stop strategy. Let's see if we could just find a random stock. Yeah, actually, we haven't looked at Ford in a while. Let's look at that. Oh, this looks like it's about to hit lower.
Yeah, it does.
All right, so let's just say that we're going to look at an idea here on the short side. I mean, the same rules would apply to if you're long. All right, so let's just say the trigger to buy this Ford, or I mean, sorry, to buy puts on Ford, right, to go on the short side, would be if it breaks this support. So we're going to say that this is $12. Our target, I'm going to say, remember, we're thinking it's going to go down, would be this former bottom, which is around, say, 10.90. So there's a point in there. Percentage wise, that's a big move. So let's just say this support breaks and we start to go lower, right? Well, there's different ways you can use a stop strategy. Let's just say you can use a trailing stop that's based on a trend line. All right. Okay. We bought it. We went short when the stock was at 11.85. It's going lower. It's going lower. It's going lower, which means our put prices are going higher. And all of a sudden here, it crosses the trend line. And that's where you close out. So you were wrong because it didn't get all the way down to here. That's where you thought it was going to go. But even though you were wrong because you had a good stop out strategy, you were able to keep some of your profits on the table. So we have to remember, that, this is not really about being right or being precise. It's about making money. It's really about
Preserving
having
capital.
developing a strategy, or a style that makes money, and then sticking to it. Another way that people would do a stop out strategy is a reversal by amount of percentages or amount of points. So let's just say here it would be, I don't know, a 1% reversal. So let's just, all right, so we're going to get rid of this downtrend line. And let's just say the stock is going down and you say, okay, I'm in the money now. If it reverses by 1%, I'm going to sell. I'm going to cover my position. So it gets to 11.50. Whoops. And then it reverses up by 1%, which puts it at like, say, 11.60. So that would be a percentage. That might be a little too tight, but that would be a percentage. Another person might use points. Okay, it's down to 11.60. If it gets back up to, say, 11.70, that's where I get out. So a lot of people, the way to thinking about it would be your initial stop out. All right, I'm going to take this position here because I think that these buyers have left the market. Support breaks means the people that wanted to buy have filled all their buy orders. They're either done or they've canceled. But maybe you're wrong. So the initial stop out is, all right, well, if it closes back above 12, then I know that the buyers are still around. So, I'm just going to take a small loss here, and maybe not necessarily take it off the radar screen. Maybe you got the right idea, but you're just a little bit premature. So initial stop out, and then once you get some money on the table, you have your trailing stop out, which is a reversal by a percentage or points or a trend line, or it could be price levels is another way to do it. Like, just say you bought down here and this thing takes off and you say, you know what? This level here was important. All right. So the stock is up here. You say this level here was important because it traded for all these days right here. So here is my level stop out. So I'm going to stay long as we're above this price level here. Then as it keeps going up, you could say, all right, well, that's going to be my next important price level. So you do it by price levels as opposed to percentages or points. And there's no right way to do it. It's just, you got to just do what's comfortable for you. But the point of it is that if you have a profit, this allows you to keep some of it. You hear these stories a lot about people who make these huge amounts of money, like when we get in the bubble environment, like the ready environment. But what happens is people get emotionally attached to these stocks. So say someone buys a stock and it's the first time they ever bought a stock and they buy it at, just say, $5 and it goes to 50, and they're like, oh, I love this stock. I love it. I'm never going to get rid of it. And then it goes back to 45. And it's like, well, I'm down $5, but it's still way up. Then it goes to 40. And it's like, all right, well, I'm still really way up. This is going to go higher. And it keeps going down and down and down and down. And it gets back to where it goes full circle. And the person that had this big gain or big profit loses it all. Now, let's just say it gets to 50 and the person says, all right, if this reverses by 10%, I'm going to sell it because this stock doesn't care about me. So I don't care about it. So it gets to 50. It reverses by 10% and gets to 45, and that's where you get out. So you got to fight that. That's what we call like the sentimentality, where people just kind of fall in love with the stock. But I've seen it happen. I've seen it happen a lot, and people get these huge profits and they don't understand the concept of a stop out. So they just end up getting, they end up losing these big profits, which is really a shame. But it's a good example of emotions affecting decisions, right?
Well, it's definitely a good learning experience.
So like ARM here, this thing is trading up a couple of dollars. I don't know if there's news. ARM jumps on report of plans to launch AI chips. So now if I was looking at this, it's trading up here. So my trading target would be this former support level. So let's just say you buy it right here in the pre-market at 112. Your target would be up around 122 because this former support level would be my target. So we could do our trailing stop with a trend line. If it gets above or if it crosses this trend line, that's where we get out. So let's just say it starts to move forward. So you buy it at 112 and you think it's going to get to 122, but it gets to 117 and then it crosses the trend line. So you were wrong because it didn't get up to 122, but because you had this stop out strategy intact, you were able to keep some of your profits on the table. Another one could be like, all right, if it reverses by 1%, I'm going to get out. So it's going higher. Let's say it gets to 117. And it reverses by 1%. So that brings us back to about 115.75. So that's where you would sell at. So that would be like a percentage reversal. then the points, someone might say if it reverses by 2 points or 3 points, once you have that profit on the table, you gotta take actions to prevent to keep you from losing it. I mean, it's never going to be perfect because there could always be some news that comes out of the blue. But in terms of the price levels, the way you could do that would be like, all right, it looks like this. I know there tends to be support at former peaks. So as long as the shares are above here, I'm going to stay with it. And then as it moves higher and has little, valleys and peaks, you can just move up your stop out level to what the former peaks are. See, like here, right? We get up here and then we have a peak and we go down. Then we go up here. So you would put your stop right here. Now this here, if you were going by the closing price, you would not have gotten stopped out because it closed up here. Right. So now you could say, all right, well, this looks like it's going to be the next kind of important level. So that will be it. So points, percentages, trend lines, or levels could be a good way to kind of initiate a stop out strategy. But yeah, I'd say they're pretty mandatory. That's the worst thing a trader can do, obviously, is have a profit and then lose it.
Yeah.
All right, so let's look at our see the tech sector looks like it's kind of broken this now. This is another example of where support became resistance, but looks like we're breaking out, which means the sellers that created this resistance, they've either finished their orders or canceled their orders. And that sets the stage for a move higher because if new buyers come in, they're going to have a hard time finding people to sell to them because the sellers are pretty much done. So they're going to need to be willing to pay premiums to get stuff executed, and that could force the shares into an uptrend. But we still got to watch what goes on in the financials. But if financials start to break out, this could really start to run over here too. All right, we'll go look at our healthcare stocks, see what's going on over there. Looks like we got a little bit of room for some upside here. 145-ish or so. You see former support level could become resistance. And well, let's see what else. I mean, those are going to be the important sectors. Industrials might hit some resistance here because this is right back up to where it was resistance before. And let's see what communication services is doing. Yeah, this look pretty good. So things look pretty good, man. But I'm telling you, I really think that this inflation is going to really start to come in like another wave, and it's going to not be good.
Did you check out XLU utilities?
Yeah, I just want to look at something first, though. The CRB index here. Yeah, I mean, this is starting to kind of trend higher. But even if we look at this, like this is the CRB index, right? This is like an index that follows commodities. And since the beginning of the year, it's up about 9.4%.
Oh.
And we're only a quarter of the way through the year.
Yeah.
So, this 3.8% inflation, I think is not right.
Well, the fact is, it's trending in the wrong direction. They want it to be at 2, but it keeps slowly creeping up. That's not a sign of a healthy economy, and that's not either.
Well, they just keep spending, and it's like it's ridiculous. I mean, it's like the answer that they use to solve inflation is inflationary. Like they're just they're just dumb. And then Biden goes out there and blames inflation on corporate greed. That's just so pedestrian, man. It's like so corporate greed. The rich don't pay their fair share. Blah blah blah. It's like, gee, the rich don't pay their share. Well, that's why your son didn't pay his taxes. And it's frustrating because it's like these guys get rich just based on a name. It's not like they actually do anything other than alter our policies.
Or really have any skill.
But utilities, I would say I'd be looking at this for a potential reversal because this is, I don't know what's going on over here. I really don't. Maybe it's some kind of a flight to safety. People consider utilities safe. I mean, this is not a biotech stock. It doesn't usually go like this. So I would be looking in the utility sector for some kind of a reversal. And everyone like focuses on the AI stocks and the tech stocks, but sometimes in these old boring sectors, you can really find some trading ideas that are good. So if we go look at XLU, we could look at the stocks that are in the sector. Let's do that. So we can go check out our ETF fact sheet here, XLU. We go to look at our holdings. So NextEra Energy is the biggest, 14%, Southern, Duke. And then we just look at these because if what we look at here, this is the aggregate of all the stocks that are in the sector. So if this reverses, then just by definition, there's going to be ones that reverse more. So this is NextEra. This is the biggest
Wow.
one.
Golly, I traded the chop and missed that move. That sucks.
I'm just going to throw on just one of our momentum indicators. Whoops. Just to see how overbought this thing is. Yeah, so this was NextEra is like the most overbought that it's been since August of 21. And I assume that was a good time to sell. I was like right up here. So this is definitely a candidate for a trade on the short side here. God, I hate these colors they use.
Yeah.
I just find them
They've
so hard to
changed
read.
them again too.
I mean, I don't know where they come up with this stuff. I guess it's they do some kind of science, I would think. But anyway, so that's NextEra. Southern Company is the next biggest one.
Holy cow.
Now this looks to me like this is pretty intriguing for a potential short idea here. If these things really start to reverse, you got to wait for the reversal. You can't try to catch the actual top because no one can. But really overbought. And what's interesting about this one is it's getting close to this former peak here. So we know that there tends to be resistance at former peaks. So these overbought conditions are going to draw sellers into the market. And we're also getting to a price level where we know there's a lot of sell interest.
Mark,
So this would be one. I think this looks more compelling than NextEra. All right, let's see what Duke looks like.
You got a question here from Di.
Man, I tell you, my eyes are getting so freaking.
Here, I'll put it on the screen so you can read it better.
No, I can see it. Would you suggest it wiser to test your? Yeah, I think I think that for the most part, paper trading is like overrated because, to be perfectly frank, it's not that difficult to make a profitable strategy on paper. But what's hard is that when people actually have real money in the market, their emotions get involved. And that's where the problems come in. Like you could develop this great strategy, but if you don't stick to it because your emotions are making you sell things too early or hold on to your losers for too long, then it's not going to work. Like I always say, Wall Street is full of great back tests and great paper trading strategies. But all that being said, I think you should spend some time, a couple weeks or maybe a couple months, whatever, to develop a strategy on paper and get confident with it. And once you have that confidence, that's when you start putting in money. And don't put in so much money that it's going to make you afraid if you lose. I mean, because if you put in too much when you're first starting off, there's a chance that you could start to trade scared, which is something that we certainly don't want to do. But at some point, you need to put some money in there just to learn how to handle your emotions. So just make it enough where it's like just enough to like bother you if you lose it, but you're not going to end up on the street if you do, you know, like even if it's like $1,000 and you take 10 positions, put $100 into each, it's just going to feel different than if you're just doing it on paper. So I would say get your strategy on paper that you're comfortable with, then put a little bit of money in it. And then as you start to get some experience, then that's where you start to kind of put more into it. But yeah, definitely work it out on paper first, because you don't want to just come into the market and be like, what am I going to do? How am I going to do this? And you could just do things like, all right, you know what? I'm thinking about a reversal here on Duke, and my trigger is going to be if this happens, if this blue line gets back below the red line. So you write that down, and it's at 103, and maybe you don't look at it for a couple of days, and in a couple of days you look back at it and see if your idea worked out. And like we talked about the stop out strategies, that's got to be part of your technique. You need your target for a profit, but you also need to know how you're going to get out of it. And it's a lot of times like buying a new stock is easy because it's like fun. You get this like new friend, and you get a stock you can watch, you can tell your friends. But when you go to sell, assuming it's not break even, when you go to sell, you're either going to take a loss or a profit. And both of those are going to mess with your emotions. I mean, it's like back when I was working at SAC, it's like people would really try to talk to Steve about different, what strategy do you use? You use moving averages, use this, use that. And he's like, there's a lot of strategies that work. The problem is that people just don't stick to them.
Right.
So there's Duke.
Here you go. You got a question mark. Why does SO look weaker than any?
Well, let's just see here. I would say SO looks more interesting because it's trading at a former peak. So it's overbought and it's at a former peak, whereas the next error is only overbought. It's not at a former peak. So the overbought conditions are going to bring people into the market who want to sell because they're going to be anticipating a reversion or a reversal to the mean. And we know that there's a big group of sell interest, or I should say there's probably going to be a big amount of sell interest around the $80 level. So those two factors, in my mind, make this a better target on the short side than next error. But again, we got to wait for the reversal to actually start. So maybe the reversal, if we go back to our sector, right, the utility sector, what could be a sign of a reversal here? All right, we just broke this uptrend line. Now I'm going to go look at these stocks and see what I'm going to do. Or maybe your reversal is if the RSI gets back below this horizontal red line, right? It's like, all right, what am I going to do? Oh, I looked at Southern. That looked pretty good. Let me go look at that one again. Constellation Energy, Sempra, Electric Power. Let's see. Let's forget the symbol. CEG, that's right. Yeah, now this looks pretty interesting too, because I mean, this is just, I don't know, maybe some of these are electric utilities, and there's all this talk about how much electricity AI is going to need.
Well, they have the co-ops doing fiber now. The electrical co-ops are also running fiber optics down their electrical lines. So there is going to be a little bit of a once they get all that implemented, there'll be some nice little adjustments as far as the money they make.
Well, I think the whole problem with this AI like revolution here is that people are just going to become too dependent on it. And so, as someone who goes through like a lot of headlines, it's like it seems like there's just like spelling errors all over the place. There's an article that would be with like a picture that the picture has like nothing to do with like what's in the article.
Right.
And people, the youngsters of our generation, for the most part, are pretty damn lazy. My daughter, she's down in school. She made the dean's list, so she's doing really good, and she's really proud of
Awesome.
herself, as she should be. But she was saying in her English class, she did a report on Edgar Allan Poe, and no one in the class knew who the guy was, other than the
No
professor.
way. Seriously?
Isn't that pathetic, dude?
That's the travesty, is what it is.
Yeah, yeah. And she also said, no. I mean, I find this hard to believe, but she wouldn't lie to me about it. No one knows who Mark Twain is either. And it's like Mark Twain is considered the greatest American author by a lot of people.
Oh
But
yeah.
but because in the book maybe they use the N word, right? They like ban them from the libraries because they're too stupid to know that it's actually anti-racist. It's not racist. Because one of the things about Mark Twain and Huckleberry Finn is they have the escaped slave with them. I don't know if you remember.
Yeah.
But it's the book was written to show, well, one of the reasons why it was written to show that like slaves are actually people, and
Right.
they befriend the former slaves. So it's actually an anti-racism book, but because they use language that some people get offended by, it's like, well, let's rip that one out of the library,
Yep. Yep.
All right, everyone. All right, so if you got any questions, let me know. If not, I guess we're gonna get going. I got to go over to the our friggin' car. The Mercedes isn't starting. The car is such
Oh,
a pain in the ass.
that's gonna be painful. You going to the dealership or is it under warranty still?
Oh, I got to just bring it over to the garage. I don't know how many thousands of dollars this is going to cost. But anyway, that car is nothing but problems, man. When it wanted to start, I opened up the hood to see if I was going to jump the battery, right?
Yeah.
It took me like 20 minutes to find where the battery is. Like in
Yeah.
my truck, it's right up front. Like it's like in the back underneath the cover. So it's like you got to take the cover off. It's like I think they make them purposely complicated.
They do, so you have to take them to a mechanic.
Yeah. All right. Anyway, all right, everyone. So I'm gonna go take care of that now. But we'll be back tomorrow, and I'll see you then.
Thank you guys. Have a wonderful day.